Hey guys, welcome back to the channel. So today I'm going to talk about the CELH's deal with PepsiCo and what this means for the stock going forward. I believe PepsiCo has been absolutely robbed and CELH has done an amazing thing with this deal. If you've been following my content on X as well, I'll leave a link in the description. I was telling you that the merchandisers were very confident that the distribution for Alani Nu will be received next year, and that prediction has played out quite accurately. We'll talk about what the deal terms are. We'll talk about what this means for all the three three brands within the portfolio, what the benefits would be for CELH going forward, because this is actually quite different and reduces the risk of what happened back in 2022 with CELH. It's not completely off the table, and there's some other risks that we'll cover with this deal as well, which I will also share in the end, because we want to talk about the downside risks as well, so that once you start, this is a scenario that eventually will play out, and once you see that happening in in your store visits and on social media or whatever, then you can kind of position yourself accordingly as well, right? Like the exits are also important. You don't want to round trip all your gains unless you're like a long term investor and you think that this stock could do multiples over a longer period of time. Then that's something else. But I am someone who's a social arb investor, so as long as the socials stay intact, I'm in. As soon as the social starts to go down, I don't want to be in this trade anymore. So that's what we will talk about. We'll talk about all these things. In the end, I'll talk about some of my market positioning. I had shared something that I've sold 50% of my position. This is just like for risk management. My CELH's position was almost 30% of my portfolio. Now it's down to around 12-13%. I'm very thankful to CELH, the management and everything else, because they have really helped me with my yearly performance so far, along with D-Box, which I've also shared, which has also done really well recently. So yeah, let's talk about the deal terms here and why I call this daylight robbery. I'll just show you a very concise picture of what this deal is, and you will know how who won this deal. So what did PepsiCo receive? PepsiCo received 11.3 million shares at $51.75. So effectively, they received 110 million discount. Yes, another win for them is the Alani Nu distribution, but I think that's a positive for CELH more than it is for PepsiCo. So PepsiCo receives the energy drink captaincy. We'll talk about this because this is the greatest benefit from this deal for CELH. The Alani Nu distribution expansion, because Alani, as we know, does the AB system, right, where they have a network of a bunch of different distributors and they sell it through those distributors. But now with this with this new PepsiCo distribution, it'll be more centralized. So, and PepsiCo has more network, like the merchandisers have a larger network. So the biggest impact, the positive impact that's going to come from this deal is the fact that they can actually go to different places which they have not been before, which they didn't have access through their network of distributors. So this will be a big deal for Alani. We know that if Alani had the PepsiCo distribution before, they would have been able to maximize the Witch's Brew LTO that dropped recently, and actually the management also talked about it on the webcast, and we mentioned it multiple times, right? And I've also tweeted about it as well, that the Witch's Brew is going to be a huge driver of growth for Alani Nu, and the analysts also talked about what we talked about already in our previous video, that the scanner sales data is going to be massive, and the analysts actually mentioned that as well. So we've been pretty consistent so far with this one. I'm actually very happy. It doesn't happen too often when your thesis actually plays out how you think it's going to play out, but this is one of those where you can kind of follow the trends, just do like store visits and stuff like that. So it was an easier trade as compared to other trades that you would do under a social arb where you don't have much idea as to what is going on. So yeah, the Alani distribution is going to be huge for them. They get $585 million to delever the balance sheet. They almost took, I think, $1.1 billion or something like that for the loan that they took out to make sure that they could purchase Alani, which is now been a great decision. They've already doubled, like almost 2x their what they paid for it last year, and that was also a very good strategic move, and the timing of it was also massive from them. So $585 million to delever the balance sheet, and a PepsiCo brand that PepsiCo paid $3.85 billion for, they get this within this deal. So, and this is huge. Obviously, this brand, if it was to sell right now, it wouldn't sell for that much, right? Probably won't even sell for half of that at this point. But you'll probably even get like $1 billion maximum for Rockstar, and even less, right? Like the market share, we'll talk about it, and why I'll like. So let's get into the benefits of this and what this means for CELH. So first of all, I think people are thinking that this is for Rockstar, and the fact that they get Rockstar, then that's big. Let me tell you, that's not. I think it's almost like CELH did a favor, and they were kind of forced to buy Rockstar. Because the yellow line is the Rockstar market share, the orange one is the total. You'll see how the Rockstar share has continued to decline. There hasn't been a single quarter where Rockstar has gained market share, and I have seen Rockstar like at places where I don't see, like, shouldn't see it, like, you know, in Dollaramas or like in, like, even in grocery stores and stuff like that. The main reason is because of PepsiCo's distribution. Now PepsiCo prefers a brand that they completely own versus Celsius and Alani. Now that has changed. Now Celsius, so this is the biggest benefit according to me, and this is how you will see this play out. The biggest benefit here for Celsius is the fact that Rockstar is now part of Celsius. So what that does is that reduces the incentive for PepsiCo to prefer Rockstar. Now with this captaincy portfolio, what happens is these three brands are going to be looked at as one under the PepsiCo umbrella. Earlier, and I think Celsius management, from what I like from the earnings call, actually they've started to realize the importance of the Alani new brand as well. I think they've been talking about more and more. I think they were kind of stubborn around. Obviously, you know, there is some emotion attached to the brand that you've built versus the one that you've purchased. But now they're starting to realize that themselves. I think they're probably blown away by the Alani new momentum, and I think they are starting to, as we can see, they're starting to take some pieces from Alani new playbook, you know, be that LTOs, be that, you know, social media marketing and stuff like that. Now with this, what's going to happen is these three brands are going to become under the same umbrella. What that does is you will see, in my opinion, you'll see the Rockstar share actually go down massively. Rockstar share will go down massively, and this will be replaced by most likely Celsius and Alani. This is actually very beneficial. So the thing on the call, which is, you know, interesting for me to listen to, and I don't know if anyone else like noticed this, but the retail sales for Rockstar are 640 million, and Celsius only expects 250 million of this to flow back to them. This is really, really bad. Like for margins, if you look at this, like 250 million in sales, I mean, this is not accurate, right? It could be higher, but 250 divided by 640. That gets you to 39%. So 39% of the scanner sales data is flowing back to the company. For Celsius, that's around 50%, and for Alani, it's around 65-70%. So right now, because Alani is like the the brand that is the viral brand, so your realizations are higher. And if you haven't watched my initial video where I talked about the distributor network and how this works, I will link it right now. You can go watch it. So this is going to be big for them, because now every retail sales that happens at the Rockstar, like for Rockstar, is going to be replaced by Celsius or Alani, which is better for realizations, right? So it'll be more accretive. In my opinion, what I think is this going to play out. So this partnership starts in December, right? So you won't see this in Q3, even Q4, even Q1. Next year, Q2, Q3, you'll start to see Rockstar decline massively and be replaced by, either Celsius going up massively or Alani going massively. Because what's going to happen is Celsius, with this captaincy, and this is the biggest thing that they get from this deal, is they decide how the products are showing up on their in the coolers and stuff. So when they have this option, you know, like so this is the cooler. Like this is a great example of this, right? You'll already see how, like, you know, Celsius, Alani, Rockstar is like just this small portion here. This is how you will see this play out right now. In like they're not the coolers that are owned by Celsius, but where PepsiCo does the distribution, Rockstar has a lot of shelf space. Why? Because obviously PepsiCo's distributor network, they own it completely. They want, you know, this brand to be shoved down people's throats almost. So what's going to happen now is Rockstar is going to get replaced by Celsius and Alani slowly and gradually, and you'll see the like wherever Rockstar is very strong, Rockstar stays in those locations, but wherever Rockstar is not strong, but it's just on the shelves, it's not selling in properly, right? And PepsiCo is obviously very incentivized to move the product quickly as well, right? Because their revenue goes up. So this Rockstar revenue is going to get cannibalized massively by Celsius and Alani. But the biggest thing for Celsius in this case is the Celsius margins for Celsius and Alani are way better than the Rockstar brand. So you'll see this. I believe that this share from 2.4% is probably going to go down to 2%, even lower. Like slowly and gradually, we'll see these getting cannibalized. The share might not increase as much, but this is going to be accretive to the income statement. So that's the biggest benefit that comes from this. Obviously, you own a brand, right? You have more shelf space, but the biggest thing is this captaincy perspective, where you get the chance to basically have all the rights on your planogram where you want the product to show up, what product you can you allocate to what store and stuff like that. So this is a huge thing for Celsius, because they can kind of control the distribution, and this is quite big. And Monster has this deal as well with I think with Coca-Cola, and that was the reason why they were able to gain so much shelf space and everything else, right? So this is a landmark deal for Celsius when it comes to this part, and I think this is what is going to lead to higher margins and everything else going forward. And obviously They also said that Rockstar is EPS accretive. So we'll talk about these things in detail here. Look at the presentation and talk about a few things that I kind of highlighted out. So we talked about the synergies already, right? PepsiCo distributing Alani Nu in the US, and Celsius Holdings is acquiring Rockstar brand. The synergies are the biggest thing, where they can kind of decide what shows up where, right? Here I said that could explode Alani share and expect Rockstar share to decline further. We already talked about this in detail as well. This is going to be, the big thing. Wherever Rockstar is right now, it's not selling through. Alani has a better chance of selling through in places where it's showing up. So Rockstar probably gets cannibalized by Alani and Celsius over time. And I think that's going to be huge for them. The other thing which I would say is going to lead to a massive Q4 beat, which I don't know if the analysts have modeled in yet right now or not, is going to be this thing here. The fact that they get this huge short-term gains from stocking up possible in Q4. So what this basically means is PepsiCo gets the distributor network in Q4, December 1st, 2024, right? 2025. PepsiCo will have to buy a lot of stock to fill in its distribution network. So say what happened before is Alani was in 3 or 4 stores. PepsiCo has no access to these 3 or 4 stores, and they just basically through the distributor network, which is more fragmented, they these distributors. So Alani sells to distributors, multiple distributors who have 100, 200, whatever allocations they have, sells them through, and then they basically go to different stores and just stock up or whatever, right? So this happens here. Now what's gonna happen is you're gonna have PepsiCo here, which is gonna buy, which has hundreds of these stores, way more than what the Alani distribution network is right now. So there's a lot of stores that PepsiCo needs to make sure that they go in and fill in. So what they're going to do is they're going to buy a massive chunk of Alani, in Q4, and then going to go and start stocking up on these multiple places. How the revenue is realized is when Celsius makes the shipments. That's the point where they realize their revenue. So Celsius Holdings is going to realize a massive amount of revenue in Q4 based on how the Q3 goes, which I think is going to be very strong as well. Or Q4, even the beginning of Q4 with the Winter Wonderland flavor is going to be huge for them as well. And I think that's going to lead to PepsiCo almost FOMOing in and wanting as much stock as possible so they can, stock the shelves and everything else. So I think that's something to keep an eye on. Q4 is probably going to be another blockbuster quarter because of this sell-in, and if the momentum continues, and we see Celsius LTOs doing well as well, which I don't know if I have too much trust in that one, honestly. Celsius LTOs, I don't know if they'll have the same sort of impact as the Alani LTOs do, because the Alani momentum is because of women and the fact that they're so share everything on social media, and that just leads to a lot of things happening. Celsius brand doesn't have that. Celsius has its core following, and the following, according to me, is not for social media, but it's for actually functional people who actually want the caffeine. At least for me, I generally have Monster, but when I need actually real energy, I guess I'm tired or whatever, I generally go for a Celsius because it has higher caffeine content. So I think the LTO could be a beneficial thing, but I'm not 100% sure just yet that that's going to be a big thing, because I think the brands are different. So we'll see how that plays out. But I don't really think Celsius is going to gain massive market share just like Alani did. But there's a possibility that they're able to do that. So that's something else to keep an eye on. So yeah, energy captaincy, Celsius and Celsius Holdings and PepsiCo within the energy category, and expected to increase the category's productivity for retail customers. Obviously, the customers also benefit from this, right? If they don't have to keep Rockstar stock, and if they can replace that with Alani, Alani sells better, right? And they would rather have that than have Rockstar shelved up on their spaces where, on their shelves where it doesn't sell much, right? So yeah, so the retail planograms, SKU prioritization, and promotional execution. So PepsiCo will prioritize Celsius brands. We don't know how much that's going to stay if the momentum starts to stall or the energy category itself starts to, get contracted a little bit, because, PepsiCo owns a lot of brands. They have a lot of distribution for a lot of other brands as well. They would prioritize Celsius over other energy drink companies. But if the energy drink market itself, stops to slow down, which I don't think is going to happen for a little bit at least, but we're starting to see the narrative a little bit come up on social media where people are talking about, how it leads to infertility and stuff like that. So that is something that could pick up, and we've seen that with the Witch's Brew, the flavor was getting a lot of negative sentiment as well recently on TikTok and social media platforms, where they were saying that people are having strokes and stuff after having a witch's brew Alani. So that's something that could mar that, and that's biggest thing that has been which has been like the biggest con for me since the beginning. I've been sharing that that's the only thing to watch out for. If that starts to like take off, this could be really impacted. Again, I shared it in the first video. It's linked in the description. You can go watch it. So yeah, that was something that we should definitely keep an eye on. So yeah, so here we shared like this bad realization for Celsius for these sales, and that's why I think this is not going to get prioritized. And the fact that they can kind of control the fact that they don't want to have Rockstar on the shelves because Rockstar is not good for their financials, that's possibly going to be another factor for them to replace the Rockstar distribution with PepsiCo, with Celsius and Alani. So yeah, so I think this will probably be confined to places where it does well geographically, and then it just goes away like in places where it doesn't, because we know that even Red Bull and Monster have been completely shifting their strategy from like high sugar content energy drinks to sugar-free energy drinks, and that's something that Rockstar lacks. And either they launch like energy drink sugar-free options, or they just get cannibalized, which I think is going to happen. But also cannibalization is cash accretive, EPS accretive, revenue accretive for Celsius. So that's the downside scenario. Now the biggest con for me here is the key platform risk. So that's something that happened back in 2023. We keep on bringing it up over and again. The analysts keep on bringing it over and over again, because I mean it was a huge issue for Celsius, and it will remain a huge issue, right? Like we all know, like the key customer risk, right? Where like if most of a company's revenue is coming from a specific customer, if the customer is health or customer level issues start to show up, or the customer decides not to buy your products or something like that could impact the company that's selling through that key customer. Like say like merchandisers go on a strike, like just random examples, right? Or like energy drink portfolio starts to slow down. Celsius, just hypothetically, like Q4 is a big quarter where PepsiCo comes in, buys a bunch of stock, there's a bunch of sell-in, they get a lot of product on the shelves, and then the energy drink market starts to stall, and the product doesn't sell through, so they have to give a lot of discounts, which will impact Celsius revenue. And then PepsiCo again is a little more cautious as to how much shelf space they want to give energy drink. If they want to give them energy drinks like shelf space, but it's not selling, what happens then? Like at that point, it gives them like PepsiCo will have a lot of control over how much they're buying, and PepsiCo also could like change the deal terms when the momentum is not there. Like not change the deal terms, but could impact revenue, could like increase discounting, could like lead to a lot of problems for Celsius, which has happened in the past with the Celsius brand, right? So if the category slows down, which it eventually will, that's just the CPG scenario. Not to say that it won't come back, but it could slow down, right? And then at that point, PepsiCo has a lot of bargaining power, which is resting with Celsius right now, where they can go back and like increase discounting and everything else, and all of that will flow back to Celsius. They stop buying as much as they're buying, start being cautious and stuff like that. So that is the key risk here. I would say if you are doing channel checks, like I do all the time, go to the shelves and keep an eye on discounting. As soon as discounting starts to go up, that the momentum is starting to slow down a little bit. Or like if there is if there's same discounting, but you're seeing like the shelves being empty, or like the shelf space getting smaller and stuff like that, that's something to keep an eye on. You can talk to your merchandisers or like the employees working in the stores and everything else, saying, okay, how is this selling? What's the best store? Like, don't make it too obvious, right? Just like try to act as a customer as to like what is the best one, which sells more, which is popular and stuff like that, and see what information you get from that. So that's basically what channel checks are, right? So that's what I would recommend here. I think we are in a very good place with Celsius. Q4 is going to be huge. Q3 with the Winter Wonderland, and I think the management said that there might be an additional LTO this year for Alani, and I could see them doing that because I mean they get so much traction, so much revenue from these LTOs. So why not, right? So there might be another LTO pre-Christmas, and then maybe the Winter Wonderland LTO, which was the most popular LTO last year, is available for longer as well, just like the Witch's Brew has been this year. So that's something else to keep an eye on. I feel like this brand is still like a still a rocket ship, and it still could grow. And the other important thing is, I think the management is starting to kind of spread the word more about the brands and the portfolio and everything else. They're doing 2 more investor conferences in the next month, which I will cover as well if there's anything material that comes from that which we haven't talked about, which I haven't thought of, or like haven't heard anyone else talk about, or it's not obvious, I guess. We will talk about those as well, or if the company kind of gives us more understanding around what we already talking about in this video, and just confirming that, or like adding more to that and stuff like that, or like maybe even some talk about the LTO, what that's going to be, and how that can impact Alani and Celsius Holdings as a whole. So hopefully you like this video, guys. And now I guess if you don't want to listen to this, you can click off. I'm just going to talk about my sell and why I sold, and like how I see the market kind of playing out over the next 4 months or 5 months, I guess. 4 months, I guess, left for this year. So I have significantly reduced exposure across my portfolio. The only thing that I haven't sold so far is D-Box. I am sitting on about 30% cash. I've not had that big of a cash position in a long time. The only reason is like I struggle to find good risk reward ideas. I generally would like to have a risk reward of more than 5 times, where I think the downside is like X and the upside is at least 5X as to what my downside is. So like for Celsius, when we started covering around $35, my initial buys were at 28, but most of my buys came in at the 34, 35 level. My thinking at that time, or my understanding of this scenario, was basically that our downside with Celsius is probably $5, and then our upside, which we covered at that time, was $65, and interestingly, that's where the stock is right now. So we talked about $65 being the initial target, and at that point, if we do have more catalysts, then we keep on going from there, which I think we do have catalysts, and I think there's still decent upside from the other things. But at this point, the story has been well covered and well known by the market, so that my edge has kind of gone away. It has dissipated. People know about this already. At that point, like, I was the only one basically covering Celsius massively, and Alani specifically, everywhere on X and everything else. You can go back, look at my tweets, look at my videos, and like people were saying that this is not as big as you think, or like things like that. And maybe like some people actually unfollowed me because this is a stock that has had a very polarizing type of audience, where the stock has dropped so much, right? Went from like $100 to I think 27, 25, $23, something like that, right? So it has a very polarizing kind of like a portfolio, like a investor base, which has lost a lot of money in the stock. So it was kind of hard to champion a stock that has lost so much money, people so much money. But at this moment, I'm getting a lot of engagement from my Celsius tweets. I'm seeing a lot of people starting tweeting about Celsius and Alani and everything else. So I think the edge has started to dissipate a little bit, where people already know about the story. So I think like that's where the social up thesis kind of plays out, where like you have something, something that the market doesn't realize yet, and as soon as like the market eventually realizes what you're seeing, and then the initial edge, the initial big move that you can get from re-rating of these type of stocks is not there anymore. So that was the reason why like I basically decided to sell, and then obviously I just want to be more conservative because I think the market is a little extended in the short term. That generally happens when you're trying very hard to find ideas, but you can't find ideas because everything is either already gone up so much, or just the risk reward doesn't make much sense. Right now I think the Hasbro and Celsius and D-Box still remain the best risk rewards according to me, because these are considered defensive stocks, right? Even if the market takes a downturn. I guess D-Box not so much defensive focus, but they have a lot of catalysts which should unlock value and hopefully have the stock price in the short term. So like the risk reward is just not there for me anymore. I've never had this type of cash position. Like, I shouldn't say never, but I haven't had this type of cash position in a long time. So because I'm just struggling to see the good opportunities. I do have a couple of hedges in as well. I have shared them on X. CELH is one, and then Roblox is one. Roblox is way bigger of a hedge for me than CELH. If they don't work out, that's fine. I've already made the money that I have invested in Roblox and a little more. I've already taken some profits on that short. So I'm not too concerned with that one. I'm just gonna let that play out because I think the market is not fully appreciating the brand damage that's been done and what is going to be done with the release of the Chris Hansen documentary, which is planning to come out. I did buy some Fubo stock as well. I'm trying to trade with the range, and yeah, like the new skinny bundles could be something that could help the stock going forward. I have made a detailed video on that as well. You can watch out. But yeah, like in general, I think the stock market is a little valued, overextended. There's a lack of good ideas, good opportunities in the market right now where the risk reward is enticing. So I'd rather, if the market was to take a downturn, I'd rather make money on my hedges and just allocate it for, because we're trying to get to, like, my personal goal. I know it's a little exaggerated and you might see like this is unrealistic, but I want to try to do at least 50% per year, because my capital base is not massive, so I have to kind of play with that. So timing is very important for me to be able to get to that point where I want to get to in like the next 4 or 5 years. And right now the timing just doesn't feel right of like great opportunities. My portfolio has been decently well positioned for most of the rotation so far, and I've been very like lucky with some of the timings. Like the pin tweet that I have is from April. I was 100% in, like long back then, kind of worked out really well. But right now I don't think that I should be irresponsibly long anymore, because the market does feel like it's a little overpriced, and I don't see a catalyst that could take us higher in the short term. So yeah, like if hopefully you like the video. Sorry I've not been able to turn the camera on today. I've been feeling very sick recently. Last 2-3 weeks have been really tough when it comes to that. So hopefully I'll be back to full health and making regular content again. But I just wanted to get this out for all the people who have followed me, and I appreciate all your guys' support. So we'll see you in the next one, guys. Take care.